we can focus on any one of these particular things that are happening and try and diagnose them and dissect them. But if you zoom out a little bit, I think it paints a more interesting picture. Over the last 30 years, right, the Chinese economy grew from 318 billion in 1990 to 10.5 trillion in 2020, right? Incredible growth. GDP per capita, grew kind of in a similar ratio, right? Now from $318 per person to $12,500 in 30 years. I mean, really unprecedented in the history of humanity. China now accounts for 20% of global GDP from less than 2% in 1990. Now, if you look at historically what drove that growth, we all talk about manufacturing, right? Manufacturing counts for about a third of the economy. And manufacturing as a sector was growing in China 25% year over year in 2008. And then only grew 6% in 2022. It's like basically, kind of reaching an all-time low in recent years. So that's historically been the driver for growth of this economy. And so much of the bargain between the people and the Chinese Communist Party has been keep giving us a better life, keep growing our economy, keep giving us more housing, more stuff, more food, more safety, more security. We'll support the CCP. And the challenge that the CCP is having is that a lot of that growth, the core growth engine, is starting to slow. So manufacturing is slowing. Then real estate was growing. And so real estate accounts for 7% of the Chinese economy. And I've got a good stat for you guys here. In 2005, 250 million square meters of real estate was sold in China. In 2021, 1.5 billion was sold. Every year it's been incrementing. So the amount of real estate that's being produced and sold was increasing like crazy. This year it's collapsed. So it's down forecast to be about 1.25 billion now. So the first decline in real estate building and sales. So that part of the driver of the economy in China is now collapsing. And then the financial services sector accounts for 8% of the economy. And that's been growing because it's leveraged off manufacturing and real estate and all the capital that's flown in, all of which is slowing down and stopping. There's $58 trillion of assets in China, generating about $700 billion of annual profits for the financial services industry, insurance, banking, lending, and so on. So a lot of the conflict and the things that are starting to fall apart, which may just be the tip of the iceberg, is a function of a fundamentally slowing economy and the forecast and the outlook for an economy that doesn't have the drivers it's had historically. And things are starting to come off. The wheels are starting to come off a bit. And so, look, the advantage they have is central planning, long-term investments, being able to kind of be thoughtful about this. But in order to do that, there's certainly going to be a need for the CCP to keep people in line as some of the long-term bets hopefully play out for them, as they would say. In order to do that, they're going to have lockdowns and other sorts of mechanisms of regulatory control over the people. But really, this could be the beginning of some of the unwinding and real concern about, is there a core economic growth engine in China that can save them? And what will it be?